Hiya, Jackie here from Ascend Financial Freedom. I've just read a report that 88% of first home buyers aren't aware that lender's mortgage insurance actually covers the bank and not you. Here I am to explain a little bit more about how lender's mortgage insurance works. So LMI, in finance speak, is a premium that the banks pass on to you for the privilege of them providing you money. That's right, it protects the bank, it doesn't protect you. So generally speaking, most loans are insured. The lender will take an insurance policy against the money that they're lending to you, because they want to make sure they can get it back. And it's based on the amount of deposit that you have. So somebody with a smaller deposit will have a higher mortgage insurance premium because you're seen as a higher risk. It generally kicks in around the 80% mark, so they're lending 80% of the value of the property. If you have less than a 20% deposit, then you will generally pay that fee. Now some lenders will add that to the loan for you, some lenders don't charge it, and some lenders do have discounts for first home buyers. Chat with us to work out which lenders will be appropriate for you. But with the fee, just to let you know how it's actually calculated, it is determined again by the amount of deposit you've got. So if a lender is lending you a huge amount of money and you've only got a small deposit, then you're seen as a higher risk. So the premium will be a lot higher. Generally speaking, there's a fair few lenders that'll go up to 95% of the value of the property, which means you need to kick in 5%. Now if you've only got 5%, that's quite a huge risk for them, and that fee can range anywhere up to 5% of the value of the loan that you're borrowing. Somebody at the other end of the scale that's got a higher deposit and only needs to borrow 81% of the value of the property, so let's say you've got a 19% deposit, that premium would be minuscule. So that could be 0.2, 0.4, 0.5% of the loan amount that you're borrowing versus the nearly 4-5% for if you've only got a 5% deposit, borrowing 95%. So you can see that if you can save that little bit of extra money and borrow a little bit less, you can save yourself some significant money from the fees perspective. Again, they can add that to the loan for you. Some lenders can add that to the loan for you, others won't. So you need to speak to me or another broker, hopefully me, of course me, that's why you're seeing this video, of course it is. And I can tell you and guide you on what money you actually need when it comes to buying a property. Anyway, I hope this has been helpful and entertaining, and I look forward to seeing you at the next video. Cheers.